As we heard earlier, the U.S. Treasury Department may announce plans as early as this week to return AIG to independence, to get the government out of the company. Well, joining us this morning is the Bloomberg News reporter covering AIG, Hugh, who's been with us several times talking about this company. Hugh, good to see you again. Okay, so this plan, we've gotten some hints of what it might look like, but detail for us essentially the facts of this, or what you're hearing about.
Right. So we know the broad outlines of the plan. The Treasury right now has this huge preferred stake. It's worth $49 billion. What they want to do is similar to what they did with Citigroup, which is to convert that stock into common stock and sell that on the market. Now, of course, they own a lot more of AIG than they did of Citigroup, and so that's why it's a lot more daunting.
Okay, and this will it will complete the government exit out of the company.
That's certainly the plan. That's certainly the hope. I mean, right now, the AIG would love nothing more to be able to be free of the government interference. We know Ben Moshe, the CEO's opinion about the government. Right now, the Treasury...
He'd love nothing more than that, right?
He wants to do that so badly. The Treasury right now also would love to be able to declare victory on this bailout, which, of course, was one of the least popular of the financial crisis.
Right. One of the most criticized, you could even say. So how have the talks so far been between the regulators and between AIG? Have they gone so far?
My understanding of the tone and what we can say right now about the tone of those talks is right now it's very much the Treasury wanting to dictate the terms of the arrangement and just sort of wanting to push AIG to articulate the terms of how it sees its eventual independence to the market. Because eventually it's, of course, the investors who are going to have to step in and take ownership of AIG.
Well, and the AIG itself, the company's Ben Moshe and the board, I mean, have they received that tone?
They've received it. They've hired their own advisors. There's some back and forth. And I think right now, what I talked about in terms of the tone is just that the Treasury feels like they're very, very eager to have this message out there.
Okay. And any major roadblocks you've heard about so far, or no?
Well, as I see it, the major execution risk is really these two overseas sales that they hope to accomplish, and they really have to. If you recall, they actually owe the Federal Reserve $20 billion, so they need to pay down that $20 billion before they can actually even get to the front door of paying down the Treasury.
You're talking about American Life and AIA, right? You're talking about those divestitures, those being perhaps the biggest roadblocks then.
Right.
Okay.
Right. And right now we know the sale to MetLife of Alico is pretty much on target, and it's on target to close November 1st, I think. So it's really the IPO of AIA, and depending on the capital markets out in Hong Kong, that's really the sort of execution risk. Right,
that's in question. And all of this, how will it be received by the shareholders themselves?
Right. Well, I'm eager to see how the market opens, in a few minutes. Right now, AIG obviously has been up about 22% this year. So, they've transmitted this idea of the preferred conversion, and the stock has done pretty well. So, it's really a question. The common shareholders are going to go from owning about 20% to owning about 8%. So, I mean, it's a major dilution right there. And between those two forces, we'll have to see.
Right. It's almost kind of, you get the dilution, but at least you get the government out of the company. So, you kind of see that trade-off a little bit in some ways. Hugh, thank you so much. Good to see you as always. Hugh, our Bloomberg News reporter covering AIG.